the best thing you can do is to be exceptionally good at something. If you're the best doctor in town, if you're the best lawyer in town, whatever abilities you have can't be taken away from you. They can't actually be inflated away from you. Somebody else will give you some of the wheat they produce or the cotton or whatever it may be, and they will trade you for the skill you have. So the best investment by far is anything that develops yourself. I'm happy when stocks are going down. I'm happier when stocks are going down because I can buy more of them with the same amount of money. I'd be happy if I was a farmer. I'd want farmland to go down so I could buy more acreage. If I was, it just makes sense. And I'll tell you the second thing I really like. I like being trusted by people. And, I would rather do what I do with partners than do it sitting in a room myself, even though I might make more money that way.
You like the idea that people are trusting you with their savings.
Yeah. They just say, look, I've saved money. I don't know what to do with it. And
I trust you.
And they give it to me. And they don't, most of them give it to me. If as we walked out of here today, I said, I would like to buy 10% of your financial future. From this day forth, you were going to give me 10% of everything you earned. How much would you want to charge me for that? You can do anything you want with the money, but from this day forth, you have to give me 10% of what you earn. I think it would be very foolish of you, any of you, if you asked for less than, say, $50,000. Now, it's going to be a few years before you're out earning money, and so I've got a few years of dead money there. But then I would start getting this royalty on you as you went along. So 50,000 would sort of be the absolute minimum. That means that right today, you are worth 500,000 because if 10% of you is worth 50,000 in cash today, your potential is worth a minimum on a 100% basis of $500,000. That is the big financial asset you've got. There are three major categories of investment. The first category is anything denominated in a currency. It can be bonds, it can be deposits in a bank, it can be a money market fund, it can be cash in your pocket. And the second category of investments regard items that you buy that don't produce anything, but that you hope someone will pay you more for later on. And the classic case of that is gold. The third category of asset is something that you value based on its what it will produce, what it will deliver. You buy a farm because you expect a certain amount of corn or soybeans or cotton or whatever it may be to come your way every year. And you decide how much you pay based on how much you think the asset itself will deliver over time. Stocks are safe for the long run, and they're very unsafe for tomorrow. Berkshire, 3 times since I took over, has gone down roughly 50%. Did I feel poor then? No, not at all. I knew it was going to be worth more over time. American business is going to be worth more over time. That's what you're buying as a business. You're not buying a stock. You're buying a piece of a whole bunch of businesses. Are those businesses going to be worth more 10 or 20 or 30 years from now? Of course they are. But if you think you can jump in and out, or that you know the time to come in, I think you're making a mistake. You can rearrange your business empire, which you own through that little portfolio that you have. You can rearrange that, at a moment's notice with practically no cost. It's a huge advantage, which people turn into a disadvantage. There is nothing about the price action of the stock that tells you whether you should keep owning it. What tells you whether you should keep owning it is what you expect the company to do in the future versus the price at which it's selling now, compared to the other opportunities of businesses that you think you know equally well, and make that same comparison. And that's all there is to owning stocks. The fact that you're missing out on 90% of the stuff doesn't really make any difference if the 10% you do is right. But the advice I would give is to read everything in sight and to start very young. It's a huge advantage in almost any field to start young. And if that's where your interest lies, and you start young and you read a lot, you're going to do well. I mean, there are no secrets in this business